All right, reintroducing one more time to the stage Marco and Arnaud, who are going to be talking about stablecoin payments and how they're going to change global payments in general writ large. Give them a big round of applause, everybody.
So thank you very much for being here. It's a pleasure to receive also Marco from Bridge. Before to start, may I ask you to introduce you and introduce Bridge? What you're doing?
Yeah, 100%. Great to be here. So my name is Marco. I am the head of revenue at Bridge. A quick introduction on the business. Bridge is essentially the infrastructure, compliance, and support required to build a payments business using stablecoins. By background, I joined Bridge around 5 months ago. Previously to that, I was the chief business officer at Brex, which is a corporate cards business. So on the traditional finance and payment side of the world. And previous to that, I was at Uber, running global payments, meaning acquiring disbursements and a number of financial products. So it's been great to kind of migrate over into the both sides of traditional payments and blockchain.
How do you see the difference, and how did you integrate this with these stable coins compared to Brad and Uber, Brex and Uber?
Yeah, I mean, the use case became obvious very quickly, many years ago for me, from the perspective of at Uber moving money across at its peak. I think it was 82 countries, both on acquiring and disbursements. And then at Brex, in a different way, moving smaller amounts of funds, but in many countries. And it was always just a huge struggle to manage all of that cross-border money movement. At Uber, there were times where we would do a driver payout from the US into Taiwan, which could be like a $100, $200 payout, and we would have to do it over a wire. That could cost $25, $35. And then even got to a point of accepting cash for Uber rides and moving back into the world of cash payments and dealing with collections and all of that. And so plenty of opportunity for improvement. And then over at Brex, in dealing with employee reimbursements for corporate spend they might incur with personal payment methods. It's always cobbling together a huge network of regional PSPs to be able to get money into the last mile in a variety of different countries, which just takes time. It's expensive, laborious, and so over the course of 10 years, it just became painfully obvious that there was a better way to move money globally, and it was right there in front of us in the form of stablecoins all along.
So can you develop a bit more? So what are the benefits of using stablecoins in such case instead of traditional digital?
Yes, I mean, obviously from the perspective of moving money globally with stablecoins, in near instant settlement, in comparison to using something like global ACH or SWIFT, which could take days, maybe weeks. 24/7 operations, so you're not talking about bank hours and trying to make the cut on a same-day ACH payment that's going in or out according to some East Coast time zone. And very low cost of transactions, and at times even very low cost of foreign exchange rates as compared to the main markets. And so there are no real downsides.
That's quite interesting. I'm seeing also another part, which is stablecoin have a very useful. This is in a case where you are going in emerging market and you don't have necessarily the liquidity locally in US for the transfer. How do you feel this within Bridge? Or is it something where you are also some investment visibility?
Yeah. I guess in my experience at Bridge, I've been learning more and more about liquidity management, which from the payment processor perspective is so core to our business. But previously on the merchant side and the issuer side, you just sort of consume the liquidity. And it's been interesting to see that, especially across the more exotic markets and exotic currencies, you can oftentimes get better exchange rates going from local currency to stablecoin and then moving those funds over stablecoin cross-border than you would through the traditional market. And It's very dynamic, so the rates vary on a day-to-day basis depending on what's going on and the volumes that are there. But there's this emerging network of local exchanges providing global liquidity for these exotic currencies, and it's very interesting to see how that's unfolding.
Oh, that's great. Another question we had, especially with your partnership with SpaceX, how does Bridge help companies like SpaceX with cross-border treasury operation?
Yeah, that's one of the ones that's driving a lot of reach into the more exotic corners of the world in terms of collections. And what we're seeing is global merchants that are moving money across borders and dealing with global treasury. And Uber was the same case, where Uber was managing $7 billion, at the time that I was there, $7 billion of cash balance across dozens of bank accounts, collections and disbursements on a global basis. And SpaceX has the same situation with Starlink subscription fee collections in many, many countries, and then how to deal with all the foreign exchange pricing risk and the collections and consolidation of that. And so in the case of SpaceX, we support them with collections function to consolidate all these currencies into a single stable coin. In their case, it's USDC, back into corporate treasury stateside. And we sort of see the same behavior on an outbound basis for payouts. So you have both directions of cross-border money movement in terms of collections and disbursements, tapping into these stablecoin rails.
And by supporting them, did you see some specific cost saving or liquidity improvement by using the stablecoins instead of?
Yeah, it varies a lot. In the deeper, more efficient channels, there's less arbitrage, so to speak, and the sort of the fiat to fiat funds transfers are in a pretty good spot. But in many other markets, you can achieve 10, 15, 20% improvement in the cost of FX. And then it just becomes a question of the liquidity, which I think today is, it's a difficult trade to make. But as there's more and more liquidity in stablecoins as we go forward, then that becomes a more efficient channel. So I'm optimistic about how that continues to improve.
And how do you see the evolution from the regulation like MiCA in Europe, and also put some constraint on the stablecoin?
Yeah, well, I would love to ask you that question. As a revenue-focused person in the business, I can say the principles of building Bridge have been to be very compliance first. A lot of the team is formerly from the early days of the team at Coinbase, which took a similar perspective on being kind of license first, compliance oriented in how to build these services. And we welcome regulation and direction on how to establish payment rails over stablecoins. We think it'll only help the business and create more adoption in using stablecoins for payments. And today we are sort of following along to see on what's required to comply. But I would welcome any comments from your perspective on that.
Well, we can always have my position, and I can come back to that with you. But that's an interesting question. I would like to ask you, as Chief Compliance, of course, my vision from a regulatory side, but you on the sales side, how do you think that the blockchain transparency help combat financial crime, or is not, and is opposite, and facilitate the scams and money laundering?
Yeah, I think it's counterintuitive. In the early days at Uber, we explored a little bit of, and at the time it was the Libra opportunity of a global money movement via the Facebook project, and considered it quite a bit and participated in the early phases of that project. But there was concern about counterparty risk and KYC and who would be dealing with in terms of the driver payouts. And so there was apprehension there. But now, as I've obviously learned a little bit more, it's clear that the digital trace of transactions and the ability to do KYT gives you a lot more control and transparency on chain versus ACH and wire payments. And I think that has been interesting to observe. And the more it becomes well understood, I think the more helpful it is.
Yeah, as a compliance, especially when you're on a public chain, and this I feel more comfortable as well because we have a global visibility on chain, what is happening. I know that we are putting also the travel rules in place, which will come soon applicable to everyone. Each country, especially Europe, have its own vision. How, as a sales, do you see this point? This is something who will limit your business and back to the strength that we have in fiat traditional finance, or that anyway will help to move forward anyway?
Yeah, I think that for us, that probably falls into the same bucket of we welcome progress on that front and more specificity on what's required. As a general principle and how we set developers up to enable money movement using Bridge, there's KYC and KYB on both sides of the transaction. And all that information is there. So it's required for compliance with our banking partnerships and using in the fiat rails for transactions. And I'm sure there will be many ways of encapsulating that information per transaction as is required. So we're ready for what will come on that.
Yeah, that's very interesting, especially for different business. I'm really focused, and we are regarding also for emerging market where you have a bankless system or people doesn't have access, or they have a lack of US liquidity, for example, so they need to transfer that in stablecoin and use some partners to offer this in US dollar to be able to pay people in US or buy the products. So I see a strong need on the stablecoin at this level. And from compliance, definitely we need to work with the partners, and that's why it's important to have people like Bridge or any exchange regulated to comfort these travel rules. And pushing people to use this public exchange instead of use P2P or private chain.
Yeah, I mean, sometimes the speed of onboarding customers and facilitating payments gets a little bit bogged down with KYC and KYB matters. So from the sales perspective, it can be a bit of a frustrating part of the business, but it's a core part of how we operate.
Yeah, thank you. So I would like to go with another question, which is, I think, very interesting for us. When pitching stablecoin internally, what business impact should companies focus on?
Yeah, I think there are a couple of models to think about. One is from the treasury management perspective. Fund settlement becomes almost real time, as we talked about. And there are opportunities to consolidate foreign currencies and avoid currency risk. And so these are improvements from the corporate treasury perspective in terms of working capital, cost to do business, and the speed of business. To be able to benefit from those things, you have to achieve some degree of comfort with operating with payments on chain. And so there's just a bit of an educational process to get there and an investment to implement the infrastructure. But that's from the treasury perspective, I think interesting. And then for any business that's a global merchant dealing with cross-border, both treasury and operational funds flows, or like a marketplace that has buyers and sellers on a global basis, where there's constantly payments acceptance and payments disbursements happening on a cross-border basis, I just think it's an absolute no-brainer. So I'm at some point personally going to be excited to help build that business as maybe a vendor to Uber, but there are many marketplaces that are already starting to think about moving a lot of these cross-border payments on chain, and there's just so much value to be gained there from the customer perspective to receive let's say I'm a seller on Etsy or a host at Airbnb, to get instant payout in real time, not for a 1% fee, and in many countries to be able to receive it in a dollar-denominated stable coin. These are things people pay 1%, 2% fees for today. Just imagine if those fees can become 10 or 20 basis points instead.
Yeah. It will be also interesting to see the evolution of the stablecoin use, because we had sort of fiat, then people thought about crypto, then now stablecoin is coming. Which industries have been the most receptive of stablecoin?
I think from our perspective, it's hard to say because it's so broad. From the cross-border payments perspective, we see almost every major payment service provider thinking in one way or another how to engage with stablecoins. And from the global merchants perspective, also, from the product teams and the finance teams and the treasury teams perspective, there's always someone in those organizations thinking about how to leverage stablecoins. And then I think that there's a whole nother batch of businesses that can be a stablecoin issuer. Not in the sense of like USDT or USDC, which could be like the most widely adopted funds transfer stablecoins, but more from like the loyalty perspective of creating a programmable stablecoin that has some additional user experiences or benefits that accrue directly, like in the US. I'm not sure if that exists here. Starbucks has a reloadable balance in their wallet, which is both financial engineering, but like a loyalty scheme. And so these things come just right out of the box via stablecoins to create financial gains and loyalty and engagement with consumers. So I'm just really excited to see a lot of these come to play.
Mm. And do you have more customers who ask for crypto, let's say more Bitcoin, Ethereum transfer, or still stablecoin is more preferable?
Bridge is very, very stablecoin centric in that regard. We support Bitcoin and ETH, but people are not using those assets for global funds transfers, which is really where we've focused as a business. So I can't say whether that's happening or not, but from our perspective, the lion's share of the volume is on USDC and USDT.
Mm. Thank you very much for all these answers. Do you have any question you would like to ask me? Or?
Yeah, I mean, I would love to get maybe a little bit more of the regional lens from your perspective of maybe all of the same questions that you asked, given that there's, choose your favorite. There's more favorable regulation for stablecoins in Singapore and Hong Kong, and it's sort of percolating through Europe, and the US is sort of last in line to get visibility into regulation. And so I've always just been curious about how that is evolving.
I think everyone is waiting the end of the year to see the evolution in US. That can be the main trend for the crypto and the stablecoin. Even if I think everyone can see the opportunity to use that. At the end, my view, everyone wants US dollar. It's just we don't necessarily have the liquidity. We want to this. So that's why stablecoin is the right way to move forward. We'll see how it's moving. But in terms of jurisdiction, Switzerland is quite a good one. Is supporting, they have quite a good program for, especially when you want to do securitization and tokenization. Europe want to protect their customers at the end, like we had with MiFID coming for the complex product. Are they doing it the right way or not? The future will let us. But I still believe as a compliance we need to have some rules to control this, but make it also on the right play. And I think it's more important instead of putting a lot of legislation on the product, on the crypto or on the stablecoin, we should control more the actor.
Yeah, I appreciate that. I'm excited to see how all this unfolds, and it's exciting to be a part of it while it's evolving. I appreciate your questions.
Thank you very much for attending here today, and thank you everyone for the audience.
Yeah, big thank you to Marco and Arnaud. Let's give them a big round of applause one more time.